Welcome back to my channel. In this video, I wanted to cover 3M. 3M has historically been a great company. It's been around for a long time. It's really been innovative, really smart company that has made a lot of products that companies use, a lot of business to business products, but it's a lot of products that we also know at home. I'm sure you go to the store, you find 3M products to be very practical. You use them all over the house. Now, the company's had a couple of rough years. They had a couple of big lawsuits that really hampered the company, really held them back. And the good news is some of those lawsuits are getting resolved, which is very good to hear. Overall, the company seems to be headed in the right direction. The stock has risen recently, which is good to see. I wanted to look at the first quarter earnings report and take a look at the fundamentals of the company, do a valuation, and see if it's a good buy for my portfolio. Before I jump into the full analysis, I wanted to remind you that I'm an individual investor, just sharing my journey and my analysis with you. I'm not recommending you buy 3M stock. I'm not recommending you sell it. And I'm not providing any financial advice. I'm just sharing my experience. Now, 3M is a $53 billion company, and they have revenue of around $32 billion. It's a really big size company. Their forward PE is 13, which is a very reasonable PE. And their dividend is really high, 6.27. Very nice dividend. Analysts like the stock, and they think that the price target is 11% higher than the current stock price. In the year to date, you can see that the stocks just had really significant volatility, and it's driven by news about those lawsuits, and it's really offered a really low acquisition price. As a value investor, I love picking up companies that I think are undervalued at the right time, and then watching my investment go up over time. And volatility at times is a good thing for me. So the volatility is actually attractive to me. In this case here with a high quality company of 3M, it really offered up a nice time to buy the stock. If you look at the company, one thing that's going to be difficult is they just spun off a part of the company. A lot of the healthcare related products are going to go with a company they spun off, Solventum, and they are going to take a lot of the products that are sold to hospitals, dental practices, and that company is going to be independent of 3M. So over the last couple of years, you've seen a decline in revenue. And again, this is a rebound story. So I'm okay with that. I just started buying the stock recently, and I understand that that's a rebound story. I'll take a look at their first quarter earnings report and see how their growth is doing. Overall, it is a cash flow generating company, and I'm going to take their cash flows and make the best estimation as to where I think the cash flows are going to go in 2024. The balance sheet looks really good. The company has a fair amount of cash and not too much debt. I'll use those two to calculate a debt to EBITDA ratio and make sure it's under 3. Looking at the forecast for the company, again, analysts think that the stock price is discounted by 11%. And overall, there's a hold rating on the stock. If we look at their forecast, earnings per share in 24 are expected to be $7.74. And they're going to be about flat in 25, then begin to grow in 26 and in 27. So not too bad of a forecast. It's a rebound story, and I think the stock will rise if no more bad news comes out. Looking at the first quarter earnings report, the stock did rise on the announcement, so the market did like it. Overall, the revenue was down only 0.3% year over year. Not too bad. I would call it flat. Organic growth, they're saying, was a little over 1%, which means that they sold more products into organic markets, I guess. They successfully completed the spinoff of Solventum, and that company actually received shares and sold those shares because I'm not quite sure about this new company. Not to say anything bad about the company. I just don't have enough information to make a good decision on that company. They finalized legal settlements of water suppliers and the Combat Arms Earplugs lawsuit. That's probably the biggest news. That was really holding them back because that could have been a huge settlement that could have really impacted the company. But now that they have a settlement, they can basically pay for the harm that was done and move forward. I think for the most part, 3M has been a really good company, really bringing a lot of value to the market, bringing value to society. I don't believe they meant to hurt anybody, but it did happen, so they should compensate the people that were harmed. If I really like a company's business, if I believe in their management, if I think the company is really going somewhere with their business, I go forward and I analyze the company and value the company based on their free cash flows and earnings per share. In the case of 3M, I'm going to start with free cash flows and go through that valuation and share that with you. I think that this year for 2024, the cash flows would be about $3.5 billion. And they're going to grow at a modest growth rate of 5% in the first 4 years, then a conservative growth rate of 3% in terminal value. I'm going to discount by 8.5% to get to an equity value, or excuse me, a intrinsic value of those free cash flows of $63.5 billion. The cash on the balance sheet is $10.9 billion, and the debt is $21.4 billion. So the equity value, once I add cash and take away debt, is $53 billion. The market cap is right around that amount, $53.4 billion. So really, the company is fairly priced if you look at the net present value of all the cash flows looking forward. The company earnings per share, and I believe they guided to make $6.80. So I'm going to use that, give them a P of 18, and have a growth rate of 7%, which I believe they can hit. That might be a little conservative. But when I use those numbers, I get a stock value of $130 per share. The current share price is $96.35. So there's actually a 36% discount if we look at earnings per share. When I blend the two, I put more emphasis on the free cash flow method. I get a discount on the stock of 12%. So that's a good quality company, discount of 12%. And I'll use that to make a decision whether I should buy, hold, or sell. With regard to the balance sheet, I like to have debt less than 3 times EBITDA. That really shows that debt is not out of control. In the case of 3M, that's the case. They have a debt to EBITDA ratio of 1.25, which is very reasonable. That's because net debt, which is debt minus cash, is $10.4 billion, but 2022 EBITDA was $8.3 billion. So using the best information I have, it really calculates to being a 1.25 rating on debt to EBITDA. So should I buy more shares, just hold my shares, or sell my shares in 3M? Well, let me go over the 3 main criteria, which is my process when I invest in a stock and decide whether I should buy more or sell. First, I want to believe in the company. I want to feel like I really understand their business, and I want to be a part owner of that business. I want to believe in the industry and the management team. And overall, it's yes to all the above with 3M. I think they're on the rebound, and I think they're doing the right things. I expect that they're going to do well over the next couple of years. Next is the balance sheet. Is the balance sheet in good health? And 3M does have a good quality balance sheet. Last is a discount. And 3M offers a 12% discount, which is a nice discount on a quality company. For now, I'm just going to hold my shares, and principally because I think this is a rebound story. I need one more quarter of information to feel more confident in the company's operations and their ability to execute on their business plan. If the stock dips, maybe 10%, that'll be compelling, and I'll buy more shares in 3M. But we'll see where it goes from here. The performance of the stock in my portfolio has been good. I've owned 3M really for about 3 months, and I'm up 14% on the stock. I guess I bought it at the right time. My investment was $12,700, but the stock is worth $14,500. So I've made about 14% of an unrealized appreciation on the stock. Thank you for watching the video on 3M. I hope you found it interesting, and let me wish you the best of success in investing in 2024.